Alrighty traders, so I've been doing some analysis on the indices here right now, and this is going to be looking at technical analysis only, but looking at the overall, there's actually, you see what I've done here? See these lines? It looks like there's actually there's a very symmetrical, whatever the terminology I'm trying to use right now. But there seems to be a repetitive pattern that's happening here right now, as you can see with my lines and my projections. And I'm going to share exactly what all this is here because it's something really interesting. Not only is it on the Dow Jones, but we've also got it on the NASDAQ. It's like, what? And then also the S&P's doing the same thing as well too. Now, some of you guys have been around for a while. You probably know exactly what this is. This is a technique that I've learned from my mentor who's been trading for 30 years. And I haven't really used this technique in a long time, but I thought, you know what? And since it's the weekend, I thought, I'm gonna have a bit of fun with these charts. And oh my goodness! And the reason why this is important, guys, is because if the S&P breaks, look where the next target is, up here at 7,500. Now, by the way, interesting. That's my target for the year. So I want to share that with you. Also, just a bit of an update around the actual platinum market as well too, which is PPLT. So around this platinum market, because I think platinum's doing the same type of thing. And if platinum does continue, where I see platinum having at least its first target, you can see I've got the targets through here. I'm going to share this with you here, guys. You're going to love this. Anyway, guys, don't place a trade based on what you see in this video. There's no guarantees of you making a profit from the markets. Okay, so just be smart about your particular trading. And also, guys, make sure you grab access to that free trading course. Use the link in the description. And also, guys, I'm going to answer a question as well too. I forgot to mention that. I'm going to answer a question from, I think it was Elon Musk. I still can't believe that, Elon Musk. So anyway, Elon Musk, he actually, he's still asking for my help. Elon, it's okay, man. Like, just create one of your AI robots and let them trade for you, all right? Don't ask for me. Anyway, so let's actually get into this market here. I want to give you a bit of an update around the actual platinum market and everything here, and why I've been really focusing on the platinum market here a lot as well too. Again, I'll start off with the platinum market here. Now, one thing I've noticed here is this. Sometimes you'll see the market use... this technique you're seeing on the screen right here, right now, okay? This is something that, again, my mentor taught me. My mentor is a really successful trader, right? So when I coach, like you've probably heard me talk about the inner circle and stuff like that, okay? When I coach you, not only have I been trading for 30 years, but I go to my mentor who's been I've been trading for 20 years. My mentor's been trading for 30 years. My mentor's a really successful trader, right? He's, put it this way, he's made almost $2 million this year already, and it's been a tough year for him, right? So that's the caliber of trade, that's the caliber of mentor that I go invest with. The purpose of saying that here is that you need to make sure you invest with some really successful traders and successful mentors, because if you do invest good money, the rewards are going to be massive, right? They're going to be massive. Anyway, so that's why it's important to actually find someone that you believe in and go deep with them for at least 1 year. That's what I've done with my mentor. I did that 10 plus years ago with my mentor. And here I am. I've invested with my mentor well over 6 figures. I've invested over 6 figures over the last 10 years of seeing my mentor and being with him and so on and so forth. But that investment from the 6-figure mark, I'm just letting you know, the things that he's taught me and has helped me, I make more than that per year. It's, multiple 6 figures, and even 1 year, then the last few years I did, well over 7 figures. Anyway, I'm not trying to brag here. I'm just trying to let you know that if you really want this, you gotta really get in tight with the group. And I guess that's the reason why I do my coaching as well too, right? Because not only do I go to my coach, who I've learned, helps me become a good trader and do really well at trading, but then my inner circle then gets that from there. I'm just trying to share with you a bit of foundation. But anyway, one of the techniques that he taught me a long time ago actually, and I haven't utilized this in a long time, is sometimes the market will actually give us targets based off sideways channels. So one thing I noticed here a long time ago, and I started utilizing this from what's called a channel projected target. Okay, a channel projected target. And the reason why I do this here is because a lot of the times I'm always trying to see, especially if I get into a trade, where is this likely to go to? There's no guarantees, right? I'm just trying to see where is this likely to go to. So check this out. I think you're going to really enjoy this. So whether it's the platinum, and I'm going to show you the actual in the stock market here. So when it comes down to the markets, sometimes we will get what? We will get a channel through here, okay? And so there's a channel from there. Right there, there to there, right? Now, here's the thing. That there is that there. Now, what can happen sometimes is sometimes I'll get like through here, and then I'll get a breakdown, right? That's sort of the pattern I'm looking for. Again, guys, in that free trading course, I'll teach you my trading system in that free trading course, guys, right? So just go get your free help in it. In that free trading course, guys, you know, the biggest mistakes, you're going to love it. I promise you, right? I promise you. Spend 3-4 days with me getting access to that free trading course will give you more than you've done, had more progress than you've had in the last 1 year. Anyway, so this is, and when we get a breakdown from me, if I get something like this here, it's called a channel projected target because we have a channel. Then I'm looking at the projected, and all I do is measure from the high to low, and then I project that down, right? And I use something like that through there. And I would know, now it doesn't mean it's going to stop there, right? But I know that on a bare minimum, we should at least get down to this level here. Now, how does that happen? Does it go straight down? Sometimes we can retrace to then test it as resistance and then come back down and do something like that. Sometimes we just go straight down. Boom, 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 right? But as you can see here, it's called a channel projected target. Now, I've utilized this for a long time for my own personal trading. When I've gotten to trade, like, where's this likely to go to? Now, again, for a trade management perspective, I've seen many times where I'd actually get to this. I remember one trade very, very clearly. Oh man, I couldn't believe it. I got into the trade. In fact, actually, I'll bring up the trade here right now. While I'm on this video, let me actually go. Is it okay if I go deep with you guys? All right, SIRI. Here. I'll show you this here. Because this trade here really taught me a lot about a lot. A lot about a lot. Anyway, so here it is here. Okay, let me go back to here. And this is the SIRI. And this was a SIRI, this was a SIRI trade for me. Right? Look at this here. So if I'm looking at this level here, you see how this is a channel here, right? Channel, da da da. Okay, so what do I do? What do I do? There's the Chanel. Okay. Chanel. Don't buy Chanel, guys. Do not buy stuff to impress other people. Who gives a shit about other people? Take care of home. And by the way, that stuff doesn't make you feel significant anyway. Even if you do buy it and someone says, oh my goodness, look, that's such a nice bag. Oh my goodness, that's such a nice car you're driving. Oh my goodness. And you go home and you feel like shit. Anyway, we go down. So what I used to do is I used to do this in here, right? Channel projected target, right? So I knew that I used the channel here and I'd get this target through here. Make sense with me so far? So I'd see that target through there. And I knew that if we got some sort of, I got my setup through here, all right? And I knew if we got some sort of breakout bar, boom, there. I knew on a bare minimum that there's a high probability we're going to at least get down to this level down here. Make sense? With me so far? And then, as you can see, this is I remember this trade very, very clearly because this really taught me a lot about the second layer, which I'm going to talk to you in a minute. This is the first layer. I'm trying to show you, see how that worked out really quickly. So this is a bare minimum target, right? The reason why I'm laughing is because I remember getting into this trade, right? I remember this trade. This was the trade here, right? It just took off like a rocket, and I think I got out there, or there was definitely I was looking at that, and I was looking at just this market going down through here, and I think it actually broke through there, right? And it got down to this level through here, right around 44. Maybe it was through here somewhere. Anyway, I was up a few 100% return on the options, and by the time this thing, actually, it kept going. Look at this here. It just kept going and going and going. And then this thing turned into a few 100% return here to about 400% or 500% return down the bottom here in the trade. If I just let the trade go, okay? Now, I remember this very, very clearly. The reason I'm saying this here is the first thing is that I'm trying to show you that originally I learned this from my mentor, but then I started to notice this pattern in the markets, which is a channel projected target, right? Which means channel, whenever we get the breakout, if we do get a follow through, there's a high probability we're going to get to the target through there. Doesn't mean it's going to stop there though, right? So from a trading perspective, I entered here, and then maybe around about here somewhere, I started to really exit. Broke through, I'm like, I'm getting out. I'm a bit worried because of insert fears, doubts, uncertainties. We're probably going to get a reversal soon. You probably know what I'm talking about, right? Insert thinking instead of just saying, let it go. Now, by the way, what I do now, and let me just see if I can bring this up through to here now. What I do now is I just like to use a thing called I brought up 3 moving averages here, but I now like to use a thing called a 9 moving average. And the 9 moving average just keeps me in, right? And as soon as it actually breaks, there's the 9 moving average. As soon as we actually get above, then I'm really confident now, especially in these really good moves to the downside. As soon as we start to get breaking above this level through here, above the 9 moving average. So I entered here, stay in, stay in. Now again, I got out here, but utilizing the 9 moving average would have stayed you in here. This is one of my exit techniques that I use, right? And then as you can see, you would have, by trading, especially trading options, this is what you want to see with options, right? You don't want to be in a trade with the options this here because the volatility gets crushed and all that sort of stuff. So utilize the nine moving average as an exit technique, but you've got to get into good trades first, right? You've got to get into the reason why the 9 moving average works because I get into trades that's likely to make that's already starting a nice move up or a nice move down, right? You don't want to be using the 9 moving average in a sideways choppy market. So on the back of all what I've just said there, okay, I hope you can see what I'm doing here and what I'm sharing with you here, right? The channel projected target, and again, it came from my mentor, and this is all going to wrap around the platinum and the stock market and what's happening right now and so on and so forth, okay? Now, we can see that through there, and we can see, now, again, if you're going to use this, it works really, really well, and I'm just trying to share with you an example of how that works. I'm actually in a trade right now. It's actually a bullish trade, and the bullish trade is a channel, and I'm in it. And I know I'm already in a profit in it. I'm still in a nice profit. I've been in it for last week, and I do know this trade I'm in right now it's a channel. It's a bullish trade, and I know, guess what? It has a high probability of getting to the channel projected target. But I also do know, even on this bullish trade, where you flip it upside down, I do know that just like the bullish trades, right? What does the bullish trade look like? This is just a bullish example from here. Right, what would the bullish trade look like? I'll do this thing for you guys here, live on the spot. So just so you can visually, this is what I do sometimes, guys. Whenever I'm trying to see, this is a bearish example, then I'll bring up my good old Snagit. I'll flip it. Actually, let's go back to home. I'll flip it, and that's what it looked like for the bullish side. By the way, you see this pattern here? See how we went sideways? We had a nice little we had this nice channel here for a while. We ended up getting a breakaway bar. That was a target through there. This here is the exact trade I'm in right now. But this trade was back in 2023. I just remember this very clearly because it just taught me a lot of lessons about stop trading, stop getting out based on fears and just let it go. Because these big profits here, again, 400-500% return, that's like having a $20,000 trade and making $100,000 in a matter of about a month through there. See the differences here? Again, that's how I personally trade. I like to do trades like that. And you do a few of those per year. You're looking at multiple 6 figures. And then if you have a really good year, you can start to look at $500,000 potentially, then eventually get into that 7-figure range, especially if you start to jump on some really nice trades. And then you can start to increase your position sizes to 30, 40, 50,000, having good risk management, all that sort of stuff. Anyway, I'm just trying to share with you what that is. So there's a bit of backstory about how I learned this here. And if I go down to now, let's go back to platinum here. Okay. And now back to platinum. So what I've done here with platinum is, as you can see, from here to here is, and you know what? I'll just do this here live on the spot for you so you can actually see the technique. And then we can go, then I won't use the same technique I won't use the same thing, or no, I'll use the same thing, but I won't draw it, right? So as you can see, roughly around that level through there is what? See how that level there, roughly around that whole level through there is the resistance level, as you can see? And then where's the major support level? Around through there's right, somewhere around about there somewhere, isn't it? Somewhere around about there. It's not a finite number, but it's a slight little, it's around about that, roughly that area there, right? We do know there's actually probably a little bit more up through here. This is where the platinum is right now. So, platinum channel, right? Now I do know that, look at platinum through here, right? So what you do is you actually draw it from the trend line through here. And what I'm doing here right now, guys, is I'm showing you how I come up with this. So when I go to the indices, like this here, you'll be able to see, oh, that's how he got those lines. So I'm just showing you here, and so then you can start to apply this yourself, and you'll be totally shocked about how amazing this is, because it is amazing. Okay, anyway, so see that line through there, right? So I just drew that line from the high to low, and let's just say platinum is probably platinum's gonna go up. Let's just say platinum. Where's platinum likely to go to, right? Where's platinum likely to go to, right? Round about there somewhere. And now if I do a channel projected target and go up to there, that's where it's probably going to go to. And isn't that a quinky dink, guys? Isn't that a quinky dink? Where is the target from the channel? Isn't that amazing? The channel projected target is amazing. Again, the reason why this is so crazy is because especially when I'm in a trade and we do get the breakout, I do know roughly where it's likely to go to. Again, but I'm going to say this here. Remember I said before that, again, I may or may not already be in platinum based off what we've seen in the past and so on and so forth. I believe platinum's getting ready for a really big move. And if it does get a big move, that's where if we do break above this level here, we're probably going to go to this level here. But it doesn't mean it's going to stop there, right? Remember I said you before? We could just keep doing something like that. All right? But then the same for the downside as well too. Look at this here. You do the same level, which as you can see, same from there. Same, right? See how I'm just projecting it down, right? Just projecting it. Now I'm just going to duplicate one of these, bring it down to there, that bottom there, and what a quinky dink. That's the actual low point from there. Isn't that amazing? So the channel projected, this channel, when you project it up, the target is what? Next major high. Down below was what through there. And so that simply says that if we then now, what would be the next target then? Then you do this here. If we did run up and we broke 120, next target would be where? See how amazing this is? It's amazing, isn't it, guys? Oh my goodness. But see how much you can actually get from the charts. See, a lot of traders are focusing all their energy and efforts on looking at the indicators, where I've just learned from my mentor who makes a lot of money. Bit of FYI, you'll see most really successful traders mostly use the price action only and not really many indicators. It's going to be through there. That's going to be that target through there. Now I wonder if there is, let's just go to the weekly chart. And isn't that just a quickie nick? That's that last high, that's that last line that I just drew as you saw. Where is that last line? That last line is back. This is the weekly chart, by the way. See all those highs through there? Look at this here, rejection. Isn't that amazing? So it's just, anyway, it's pretty awesome. It just gives you a rough estimate of where this is likely to go to. Now, again, that's where it's likely to go to. You just never know how that's going to work out, right? Is it going to go straight up? Is it not? We're going to do like a SIRI trade? It's like, oh, come on now. Anyway, I still made, I think, 300% return or something like that because it was an option trade. So I still made a couple 100% return plus. So again, you do a $20,000 trade, I still made 40, 50 grand on that trade in a matter of a week or two. So I'm not complaining, but you know, if you then see a $50,000 profit and eventually turn into a $100,000 plus profit, you're like, oh, why didn't I just hold on and just let the 9 moving average do the thing? And that's when I really started amplifying a lot more of the 9 moving average and just forget my fears, forget my hopes and my thoughts and foundation. Anyway. So we may get a break up through here, right? So how's it going to happen? We may just then go sideways and then go up through there, something like that. So that's what it may do, right? Doesn't mean we're going to go straight up or straight down. And that's how it's going to play out. So now you can see with platinum. And again, just looking at platinum, when you see that through there, but then you also see what? Remember I said before, that big line down through there. And then this big level all through here as well. That's that squeezing pattern. And now we're getting the breakout. I've talked about this before. I'll bring up the candlesticks now. And I won't bring on all the moving averages. Yeah, let's just do this here. And as you can see now, this breakout here, which is now looking at short term, which has now done a massive amount of price, is now combined with this level through here. Now, by the way, traders, as you know, it was this day here when this happened. That's when I brought it to your attention. You probably know that from, yeah, it's interesting. Now, what you want to do, what you don't want to do is you don't want to be very greedy with this, okay? Greed can destroy you. So just understand that things, if this goes parabolic over the next couple of weeks, and you are in platinum, if that goes parabolic, it can come down really, really quickly. So based off all that analysis, what I just showed you through there, okay? And then I go through to here, let me show you the Dow Jones. Now let me show you the Dow Jones from the weekly chart here. This is the weekly chart here of the daily charts of the Dow Jones. Let's go weekly chart here. Let me squeeze this up here. I did the exact same for what? For the Dow Jones. Now, again, this might sound pretty crazy, but we are still in a very big bull market through here, right? I know some of the big macro things I've talked about in the last few days about the big macro picture about what the radial debt cycle and so on and so forth. And they may take another 6, 12 months, maybe more to filter through the system, right? It's not like you're recognizing it today. These things have been going on for the last couple of years. So the whole thing about what I just showed you through here is I did the exact same thing for the Dow. Again, I'm not going to redraw these, but now you can understand how I come across these lines. Because look at this here, right? Actually, let's do this here. Let me duplicate you. Can I duplicate you? Would it allow me to? Why don't you allow me to edit? What am I missing here? It's not allowing me to duplicate it. Anyway, let me do this here, all right? If I do this here, see how that's the same angle? See that there? Now, how did I find this line? All I did was what? Connect the highs and lows here. And look at this here. There was the high and low there, right? Sort of like, wasn't a perfect channel, but that was the high, that was the low. As soon as we broke the high, as soon as we broke up through here, let me take you off the screen here for a minute, and I'll show you what that is in just a minute. So as you can see here, right? Look at this. That's the level there. That's the level there. As soon as we broke up, as soon as we broke through here, you'd be like, okay, we now have a good chance of what? Getting to the next target. Now, see that through there? That through there? This target is here. Look at that. That's the support level through there. Same length. Why is this important? Well, now we know the same length over the last 5 years of what this market's doing right now. And again, this can change. It doesn't mean it's not going to happen. You know, the market goes through different seasons and cycles, I've noticed. So this is the seasons and cycles of what's doing right now. But it's pretty amazing, right, to see that I originally got the length from here, the same length, which means the same length from there, project that down, and you got these massive support level around 22,000. Then when you project it up, you got that next target. Look at this here. So as it projected up, that's exactly where it stopped. This is blue skies. Like, how come it stopped there and went down? Oh, because of Trump. Okay, but the chart was actually giving you a target through there. Why is that important? Right? Because of this here. Right? Because of this here. Look at that through there. Let me just bring that down through there. That through there. Why is that important? Because now, as we can see, if we do the exact line, look at this here. It's the exact line. It's exact length. Why is that important? Because if we do continue this upward movement and we break 44,000, what's the next stop? 52,000. And if 52,000, what's the next stop? 60,000. That's based on just what the pattern's doing right now. This is a weekly chart, so that may take another. We all may be wrong about the market going down, and we're getting ready for that. So one thing I'm watching for, this is a big weekly chart. I'm watching to see what the daily charts do. Because if the daily charts, this is now the daily, now see the weekly chart? Because if the daily charts do something like this through here, and then we start to break up through there, and I'd have to say more above, let me just move this line just a slightly up through there. That's that level through there. It was just slightly below with the projection. Now we know what? If the market does something like this, and we start to break up, we now know what? Next target is up at 52,000, and it may do something like that, and it may then pause, do something like a bit of a pullback, and then go, and then run away to 60,000. Now, I'm not saying this is going to happen, but as you can see, if I go back to my weekly charts, look what happens through here. Right? As soon as we do the same thing here, right? We go up, we go through this gyration period. Recession, you know this period through here, right? You know, this was a 12-month of bear market, because we're looking at big picture here. So this is not for you guys that get tied up about 1 day or 1 week, right? No, this is a big picture. This is what could be happening over the next 6 months, maybe the next 12 months. And then let that unfold, right? It's not like, oh my goodness, the market went down 5% this week. Oh my goodness. No, yeah, as you can see, like, you don't do that with what I'm sharing with you here. Because each of these candles is 1 week worth of trading. You see what I'm saying here? It's just a really big picture. So if you get more confidence around where this thing's likely to go, you can actually see that from there to there, as you can see. Let me just bring this back down. So you can see where, now these are rough areas, rough numbers. Doesn't mean the exact 52,000 is the exact number, right? It's a rough area. As you can see, this one here was more like an area through here. It's probably going to be more like an area, right? Just roughly around that, the bubbles, right? There's a bubble there. As you can see, there's a bubble there as well too, right? It's not exact finite level there. This one here is more like an area of what? Area through here, right? Not an exact number, but just more like an area. So we can see 52,000 roughly. And then why? We could be getting ready for a 60,000 there. So if we do start to break above, as we saw through here, this is good stuff, isn't it, guys? Look at this here. Happy Sunday to everyone, guys. Happy Sunday. So look at this here. Little break up. Then look what happened. And then we started to what? Step up, and then look where it stopped. The projected target. Here was the sideways channel. Projected target. It actually did go there and stopped there. Now again, let me show you. That level there to that level there, right? See how it's the same length. I'm just measuring from top to bottom, projecting it up, and look where it stopped. And then we went through this bit of a pullback. Isn't that amazing? But if you look at this from a big picture, what's happening? Up, pull back. Break up, next target, come back down, pull back. Up, break up, next target, come back down, pull back. Are we about to do something like this? Because this is the cycle. Major cycle that's been happening for the last 10 years. Major cycle that's been happening for the last 10 years. We could be getting ready for a 60,000 Dow over the next couple of years. We may not get that. Now again, it doesn't mean it's going to, but what does that mean? We do know that if the market does break below this level here, then something's changed. But until then, guys, again, for some reason, we may not be on the verge of a big recession right now. I know everything's screaming like that, and I've talked about Ray Dalio's and so on and so forth, but we may not be. Again, this for you guys, this is where it's really interesting, right? About just really understanding what's going on here, and this is where now I know a lot of you guys are going to be confused, especially some of you guys that have got investment portfolios. You guys have got retirement accounts right now, and this is where your true education about, okay, I want to be part of this market, but then also I want to have good risk management and so on and so forth. But then also, once again, just rest assured that if we do hold here for another, and what would be good is to hold it for a month or two and then start to make a move. And if we do start to, once again, if we do for some reason then hold it for a bit through here, just to get a bit of a, and we hold it and then we get a higher low and another higher low like here, and then we start to break up and break through there. Well, we do know that roughly within, it looks like that took around about 1 year to happen. I would say 6 to 12 months, we're probably going to get to here. And maybe over the next couple of years, we're going to continue doing, because once again, traders, this is just the same thing, right? It's the cycle analysis. We break up overall, we come back down to the level through here. We break up, next target, come back down, support. We break up, next target, come back down, support. We break up, next target, come back down, find support. Maybe it's gonna continue this, because right now, as you can see, when it breaks this level, we go to the support level. Right, as you can see. So we break, once we broke here, we went to the next target. Once we broke here, we went to the next target. Once we break here, we're probably going to so on and so forth. So again, for me, it doesn't matter what I think, because my thinking is fundamentals, indicators, Ray Dalio, so that's what I'm thinking, right? So I need to keep alert on that. But I also need to keep alert on that maybe we are not going to get that, or maybe we are going to get that, but maybe we're another 12 months or so away from getting that. You know what I'm saying? Because what I've shared with in the last couple of videos about Ray Dalio and big deck cycles and so on and so forth has been what? Has been very big picture, right? Big picture analysis stuff. Which means it takes years to unfold. The housing crisis, what? The housing crisis, as you guys may or may not know, if you've watched the Big Short, when did the housing crisis start to form? I think pretty sure Michael Burry in 2005, he was actually starting to put on those shorts. At least 2006, right? 2005, 2006. But it spent what? The market kept going up, even though the cracks were showing through here for another couple of years, and then we had the big bang. So maybe we're not getting the big bang now, but maybe the cracks are showing on the surface, and that's what's coming. At the end of the day, the most important thing is what? The most important thing is the chart, because as you can see, low, higher low, higher low, higher low, higher low, higher low, higher low, as this could now be a bit of a warning sign from here. So anyway, just an observation there, guys. We're just doing the best we can. But one thing I do know is that this is repeating right now. So if we do hold here for a month or two and then break above here, we're probably likely to go to the next target. And that's what I did for that level through there. I did the exact same thing. Oh, by the way, also, which I think you'll find interesting. If I use an Fibonacci extension, which means I measure from the high of that move to this is major low to major high, and then I extend that up. Look where we hit. Look where we hit. See this band here? This band here is going to be really important in a minute when I show you the S&P 500, because you'll know how I got this. Actually, let me go to the S&P 500 now then. I'll just show you. See that band? The band is what? Firstly, look at this here. Here, angle, same length, and that's the length through there, which is up through there, right? Which is now what? The 7,500 band. See how it's all the same length? Same length, same length, same length. Now, why is this important? Because not only is it the same length, but you don't want to just draw it for no reason. You want to say, okay, does the market respect these prices? Look at this all through here. Major support. Once it broke, that became support, that became resistance. The projected target did what? Again, same length, project that up, and you've got actually just a slight little lower, right? Slight lower from there. But as you can see it there, we broke there, target. If we continue up, which we are still overall making what? Significant high, low, high, low, high, low. We're now making another high, low. If we get a pullback through here, guys, guess where we're going? Now, by the way, if you've watched my trailer video, okay, have you guys seen my trailer video? Do you guys know what I mean by trailer video? Let me show you what I mean through here by trailer video. And this way that you'll be able to start to see my trailer video that I got, which is this one right here. I said, as you can see, oh my God, just noticed this, and this was 1 month ago. S&P 500, massive, as you can see, S&P 500 massive rally coming. Okay. And the date for this was, let me just see if I can just do this here. So traders, check this out. I've been looking at this this Dow Jones chart. You can see this actually the Dow Jones. As you can see, I did this this one here on the April the 20th, right? And then I was doing some analysis from here. And actually the video that I did here was when the market was down here at 5,200, as you can see, right? So the market was down here at 5,200. And then I started to do things like this where I'm just like, you know, guys, I actually see this bottoming out and this actually taking off a big move to the upside. I did that through there. And then I started looking at the real big long-term picture, and I started doing just big long-term extensions from here. And I want to see if I can actually, do I actually have the target here? Let me just see if I've got it here. Yeah, so as you can see, like I was doing some numbers, and this is back in, as you can see, this is April when the market was down through here. I started doing the numbers. It's interesting how this is all starting to play out right now, right? So that's the low period. And as you can see, where we're still down to here, the stock market is now what? The stock market is now up here, isn't it? Somewhere. And I'm like, okay, based off this here, S&P 500 rally coming, and that's the target through there. Now, that's the trailer video, right? You can see that through. If you just go to my homepage, you'll be able to see the trailer video. It's interesting that and all I was doing, I was just using the charts as fine, and all this was simple projections. And how I really got that was this. I'm like, if this major low to major high, and all I did was just an extension. Okay. Now what I mean by that is this. This was a major low here, and this was the major high here. As you can see, right? Major low to what? To major high. Beautiful, right? beautiful. Low to high point. Then we had what? Then we had a pullback. Then I do the extension. And look where it ran to. So the one-to-one, that low to high, and that was the low, the extension ran straight to it, smack on. I'm like, okay, well, if we do break this high, we're probably going to extend it again. So then I did the exact same number from there, from the low point. Then I projected from the high. And then, where's my level? And then I brought it down to there. And as you can see, that's that line through there. If I move my, that's the projected target. Now you know the reason why I've got the band. Not only is, as you can see, this line through here is what? That line through there is just based off what it's been doing for the last, getting close now to 15, or actually last 5 years. This 5 year is what it's doing. So that, again, if it breaks through, we're going through there. But not only that, but then just above it is what? An extension that it's exactly what happened through here. And now we're going through there. So this, oh, actually a bit low, isn't it? Just slightly a bit low. There you go, through there. So anyway, you guys get the point. Roughly the 7,500 target, roughly area, slightly above it. But remember I said before, it's more like an area, right? So this whole area through here, area, and this is a weekly charts, right? So the market may go up. And this whole area through here seems like a bit of a target of where it may go to. Because remember, guys, an overall chart, doesn't matter what I think, hope, or fear, we still are what? We're still in a very big, overall big up and down and then back up and then down and then back up, up and down. These major swings are still doing this. So we may be getting in for something like that through there. So 7,500 may be coming into play. Pretty amazing, right, guys? Pretty good. Pretty amazing. So I hope that sort of helps you out there, guys. Let me just go down to now. What I want to do is I want to answer a question to finish off today. I'm trying to really give you guys the tools and the techniques of things that I'm utilizing on the outside, guys, to give you guys the best chances of kicking some serious butt. So let me just do this here. So I'm going to now answer a question, and that is from Elon Musk, and then I'll get to that now. Elon Musk once again. So thank you very much. Again, guys, if you guys got any questions, just please answer them, put them in the comment section below, guys. As you can see, I'm now starting to answer a bit more questions to help you guys out as well too, on top of these coaching videos that I'm doing right now, to really help you and coach you and guide you from there. So let me just bring this over to here, and let me see if I can do this. Okay, cool. That actually works perfectly. Here, Elon Musk network. John Howe. So from your answer to my question, and his question was about calls and puts and so on and so forth, I take you buy naked calls and puts. Yes, that's exactly right. It sounds bad, right? Buy naked. But the reason why I do that, Elon Musk, is this. If I put 5% of my account in buying an option, that's the maximum I can lose. So I know my risk up front on a maximum level. Now, that's where the option expire. Now, if you buy plenty of time and so on and so forth, it's not going to expire overnight, right? You might get a 50 or 60% loss, especially if you buy like what I call in the money options. You got a bit of a buffer there. That's the thing you should be looking at there, right? So that's the reason why. Now, the big issue when it comes to options is if you start to load too much on one trade, right? Which you don't need to, right? I could do, say, and the reason why I was talking about before, like if I have a $100,000 trading account and I put in a $10,000 trade here, I do know for me a big loss, which doesn't happen that much. An average loss is, say, anywhere between 20 and 30%. So I know my sort of an average loss is that $2,000 to $3,000. If I had a $100,000 trading account and I put in 10 grand, I know that's a loss for me and I know when to get out. Okay. A big loss would be $5,000 for me. With me so far? Now, if this thing runs on for, say 100%, 200%, 300%, right? If it runs on for, say, a 200% return over the course of a couple of weeks and I've jumped on a nice move and I've made a 20% return, well, then I risked roughly $2,000 to $3,000 to make what? To make $20,000, maybe $30,000 from there. So this is my risk on average, and now this is my profit on average. So therefore what? My 100K account grew by 30%. As you can see, it was a 300% return, and you're on this trade for about 2, 3, maybe 4 weeks, and you got that 300% growth. That's what I mean by that. It's not going to happen one day or 1 week, right? Generally, you can get a nice, good, say maybe 100% growth on the account, but to get the 20, 200, 300, 500, 1,000%, you need to be in the trade for 2, 3 weeks, sometimes a couple of months to really start to get that really, really big growth. But as you can see, this is where the risk to reward is so amazing with options. I may have a $100,000 trading account. I put in 10K. I do know the option I buy and so on and so forth. An average loss would be 2,000 to 3,000. On a sort of real big loss for me, which doesn't happen that often, I might be risking on a sort of a maximum level around about that 50% level, which is a $5,000. So I'm risking 5%, but the trade did so well that my account grew by 30%, and I was only risking roughly around 2 to 3%. So I was only risking 2 to 3%, which is, as you can see, 20 to 30% of 10,000 is 2 to 3,000. 2 to 3,000 from a $100,000 trading account is 2 to 3%. Makes sense, right? But what if this thing here makes 300%? That's a $30,000 profit. A $30,000 profit on 100,000, my account grew by 30%. You see what I'm saying here? This is why I like trading naked options. But the big issue that people have is that when they load up too much. So if you have a $100,000 trading account, you go in with a $50,000 or a $80,000 trade really quickly. That's the wrong thing to do from that. Because the worst thing to do is that you do end up getting a big loss. and you do a $50,000 position, now your account's down by 25%. This is where people go wrong with that. So yes, that's the reason why I do this. How do you determine your position sizing per trade and the time frame / expiration? Now, here's the thing from here. I trade the same thing every single time. So how do I determine the position sizing? One, what am I most comfortable risking? If the whole world went belly up, would I be okay? So for example, if I'm happy to say putting in a 20% of my account in the markets, then I know if the whole world goes belly up, 20% of my account's gone. Now, again, that's not going to go happen, right? And now, realistically, a big loss would be what? 10% of my account. I still got 90% of my accounts there. So that's what I do there. Now, remember, as I said before, 20% of my account, as you know, if I start to do the 200-300%, now my accounts will have a 50% growth on that one trade over the course of a month or two. And I've made 50% growth on my account. On that case, for 20% of my account, 20% over 200-300% is now getting close to 50% plus of growth in my account. But that 20%, if I'm risking 50% of that, on a maximum loss, I'm risking 10%, right? Now, what time frame? It all depends, right? So this is where like the big thing for you, Elon Musk, is not the options, but do you even know how to identify a real good high quality trade in the first place? I don't care how good you are with what size should I do, what time frame, what exploration. If you don't even know what you're looking for, do you even know what you're looking for? So the reason why options work for me and their leverage, because I have a high probability trading pattern setup that I look for, and when I see the setup, I apply the options over it, and then because I know when the setup works really well, because I know what to look for in a setup that's likely to make a big move, that's how the options make good profit, right? So many people are just like, well, I'm just going to trade options. Options are the thing that makes me money. No, you identifying a good trade makes you money. And then you could buy the stock, you could short the stock, you could do a margin trade, you could, do some other strategies, but you identifying good trades in the first place. Now, what does a good trade mean? Every day, Elon Musk, okay, this guy here, every day I have probably 2 to 3 main type of patterns I'm looking for every single day. They're basically the same pattern, but they've just got a few extra rules in there. The one foundation system gives me about a week's worth of movement that get 80 to 100% return. That's a level 1 trade. A level 2 trade is more like that SIRI trade that I just walked you through this video, right? That can last, 2, 3, 4 weeks and do the 3, 4, 500% return potentially, like within that. And sometimes every now and then I'll get the 1,000% growth. I know that sounds pretty crazy, but then you've got to have the trade management side of things, right? So, but the first few things, the options are the third thing. Options are the third thing here. What do I mean by that? Look at this here. So, firstly, you've got to have the pattern. What pattern are you looking for? It's the same thing every day. It's not like, well, I'm going to try this trading pattern today and then tomorrow. If you're not consistently trading the same pattern, or you don't even know what you're looking for, then it's not going to work. Then you've got to have the right trade management techniques to let the profits run so you can capitalize on the big profits and have the small losses. Do you even know how to max it? So off the trading pattern, yes, now you need the trading pattern. If you don't have that, that's your foundations. Then you've got to learn, okay, now I know how to identify the trading pattern. What trading techniques am I going to use? Trade management techniques am I going to use to maximize that profit? But also, what do I need to understand about this trade to know that it's not working so I can get out with that 20 or 30% loss on the option? And again, if that 20-30% loss is off 10% of my account, remember I used the analogy a minute ago, $100,000. If I buy a $10,000 option, that's the maximum I can lose. But then I know myself that by utilizing the charts and the system, that when it goes wrong, I could be down, 20-30%, maybe more. And then guess what? Once you know that, then you can use options to amplify what we took to then start to get these really nice significant growth. See what I'm saying here with your options and trades? So for me, it's the time frame for me is personally I like trading. Again, it doesn't matter what time frame you're using. It just a matter of now the reason why I like utilizing daily charts because I am getting in today. And my idea is to hold it for my ideal trade is to be in it for 2 months, jump on a really big move on one trade, pick up 100% return on that option on one trade over the course of a couple of months, and do that throughout the year, and I've had a really successful year. My idea is that. Successful trading is not about taking a lot of different trades. So that's the reason why for me, I've just learned that having a successful year is about having big profits. And big profits don't come from taking a lot of small trades. So I personally trade the daily charts. What I mean I trade the daily charts is that I'm utilizing my trading systems, setups, and techniques on the daily charts because I'm looking to get in today, and I'm utilizing everything that goes along with my actual trading system that's going to allow me to make that really big move from there. Makes sense? So again, I hope you understand this here, right? If a trade is not going your way after a certain amount of time, do you close it out early? Leg into a hedge? No. Or let it ride out to expire worthless. See, again, do you have this? No. Do you even have this? No. Well, what you're saying here right now is like, what? Expire worthless? Like, come on now. Right? Or then start the hedge? No, keep it simple. Now you try to lose it. See what you're doing? You are way too smart. I trade really well, Elon Musk. Right? I trade really, really, really well. Right? It's like I do really well from trading because I keep it simple. You don't need to overcomplicate it. I have a really powerful trading setup. That's the bulk of your success. Identifying good trading patterns. Then you can do whatever you like. Right? So once you have that, so and you don't want to. No, we don't need to. Or then I'm going to hedge it and so on. No. A simple trading pattern that's likely to make a big move. Check. Good trade management to say, okay, I'm going to let this profit run. 9 moving average. I gave you an example today, right? And then some other techniques that I use when it's some advanced stuff. Right? Check. Now I'm going to utilize the option. And then I simply buy the option with good risk. And then when the trade says it's not working, I get out. You don't want to. Why would you do that? No. I would say 95% of my trades I don't hold on to and it's time to get out, because then now it's like you're not going to get every trade right. So just like, okay, this trade didn't work, I'm going to move I'm going to go down. Because then guess what? If you then stay, and the worst thing that happens, and I promise you this will happen, the worst thing is that you do a $10,000 trade, you're in a $2,000 or $3,000 loss on that trade. You don't take that $2,000 or $3,000 loss, and then you start to focus on that trade. Hopefully it's going to come back to profits. Now, all your energy is on that one trade, and then the very next trade that came up a week later, you didn't take that trade, and that trade, you put $10,000 on. That trade within a month made you $30,000, but you didn't take the $30,000 profit trade, but you're still stuck with this other trade, and now you're in a loss. See what I'm saying here? So no, mentally it's exhausting, it's tired, you're focused on it, and then you start to be so focused on it, and then you start to wake up every day, I hope. No. Get it out. And expire worthless? No. Why would you do that? No, don't. No. All right. Every now and then I will take what's called a gamble trade or a thinking trade. All right. And every now and then that will happen to me, but not very rarely. Right. Not very rarely. When it comes to the bulk of my trading, I've mainly been using leaps as an addition to my underlying positions once the trade starts to go underway. Again, you got to have the same thing, right? Elon Musk, your success, and everyone watching this video, right? Your success in the markets is based on consistency. Every single day, this week, next month, month after, this year, next year. It's the same pattern. It's the same techniques. It's the same option trading. Or same trade management. Trade management means profits or losses. So it's the same thing. And a lot of people, the reason why there's no confidence with their trading and they're doing really bad with their own personal trading because they have no confidence in their markets, in their trading. Your biggest thing is having confidence that this is a good setup. That's where, the whole, again, like I talk about my coaching program and stuff like that. That's where my coaching program is really going to help a lot of people out. Right? And it's like, and again, you can see the application there, link in the description there. But the whole thing about what I'm trying to share with you is that it sounds like you're doing a lot of thinking and like, should I try this? Should I do this? And, and then you're doing this time and doing this next time and doing this. No. Consistency every single day. That's how you have successful years. I don't want you to be up and down, up and down, up and down, up and down, up and down. No. Every single year for the rest of my life, I'm going to have a really good year. Because all I have to do is now, how do I actually make this whole thing that I'm sharing with you here, right here? What do I have to do to apply this? What is the mindset of the successful trader? We know, okay, if I showed you an exact trading pattern that works, and when it does work, it's like to make big moves. If I showed you the trading techniques and I showed you the option prices or the trade management techniques to show when you should get out and when you should hold on, and I gave you this here, why do 90% of the traders suck even though it's an amazing trading plan? Because they're not consistent, right? They don't consistently, they're not patient. Oh my goodness, John, I haven't had a trade in 2 weeks. Oh my goodness, I need to find a trade. Well, that's the reason why you're not successful. And then also the discipline side. Discipline simply means that if this here, which is exactly what you're looking for, doesn't show up for a whole month, and there's no trades for a whole month, there is no trades for a whole month. Don't trade. This here is the reason why most traders don't do really well. Because I teach you all this sort of stuff in my coaching program. And that's the reason why I do have a coaching program, because then I do a weekly coaching call every single week to kick you in the ass, say, hey, get back to being disciplined. And most people are not. That's the whole thing there. But I've just learned over the last 20 years, when I'm not this here, when I'm not consistent, when I'm not patient, when I'm not disciplined, I don't care how good my system is, I lose money. So I've just learned over time, most of the time when I take a thinking trade or a hope trade, it's not going to work out for me. And I've just learned through pain not to touch the stove when my mum says, no, the stove is hot. Let me try the stove. I told you, darling. That's what my mum used to call me, by the way, darling. I told you, darling, the stove is hot. Don't touch it. I'm like, oh. And I'm a guy, right? I'm a guy, right? Guys are like double tops in the markets. Let me run at that wall. Oh, that hurt. Let me go try it again. And then a week later or 2 weeks later, I'm like, I wonder if the stove is still hot. Darling, what did I tell you last time? The stove is hot. Let me try it. Darling, how many times do I have to tell you? How many times do you have to learn this lesson? Not to do this. Don't touch the stove, right? It's like, do you see what I'm saying here? The purpose of me saying this is that I've learned that when I just stick to my trading setup, and if I have to wait a whole month, if I have to wait 2 months for my next trading setup, that next trading setup that might take 2 months to form and confirm for me might make me a few $100,000. Is that worth waiting? Now, I say that on the back of a $20,000 or $30,000 trade, right? You see what I'm saying here, right? It's like, because that could be a really big mover. A $20,000 trade, and that thing runs on for 5-6 weeks and it makes you 500% return. That's a 6-figure trade. Condense that down to a $10,000 trade. $10,000 trade, you're risking $2,000 to $3,000 on average. But if it does run on for the next 6 weeks and you do know how to manage that trade, and it does the 500% growth, I'm using that number just as an example. You're not going to always get that, right? But if you do get something like that over a good 5 or 6 weeks, now you made $50,000 from a $2,000 or $3,000 risk on average, and you just made probably half your income, and that took you 6 weeks to be in the trade. But you see what I'm saying here? This is the reason why I know that it's just not worth doing all that other bullshit in the markets. Confirmation breakouts. The few times I've tried to do pure option plays, however, I've been caught offside mostly due to timing and significant losses. Exactly. Because I guarantee you, timing is what? Timing is like, no. If you know, and this is the reason why, like Elon Musk, I must bring it back to this over here. With my trading system, I have my setup and I have the exact confirmation bar that says we're now likely to be making that move. Right? And it's not the options. However, when I do play purely options, the options are not your problem. You obviously getting into the wrong trades is your problem. I think most of my directional bets have been correct, but my mastery of timing could be better. And this is where, when it comes to my trading, Elon Musk, my trading is that I have my setup, but I know the exact entry candle that I'm looking for to say today's to get into it. There is no like, when should I be in? This is always a big thing for people, right? It's like, okay, here's the pattern, but should I buy now? Should I short now? When should I buy now? And that's the reason there's a lot of gray area. The reason why I love my trading, because I've got my setup, one, and then off that setup, I'm looking for a type of entry candle or bar. I'm looking for an entry candle. I'm looking for the precise entry candle off that setup. Again, I teach you all that from the free trading course, guys. Go check the free trading course. I'll show you what I'm talking about here. That's the reason why there is no ifs or buts. Like, no, today's the day to get into it. There is no like, oh, I'm not quite sure. So Anyway, traders, I really hope this really helps you out with your trading and your investing and your coaching. As you can see, this is sort of stuff that I do with my coaching clients all the time. If you do like this sort of stuff, guys, of what I'm talking about through here, and you do need more help, then that's secondly in the description there, guys. I have a weekly coaching program where I actually teach you my systems. I give you scans to find the trades. I teach you about the options. And then every single week, I'm doing things like this. It's a live coaching session on a small group. It's just over 20 people right now, where I can personally be answering your questions every single week and really helping you out. And then also I have a level there, if it's interest to you, where you can actually even be with me every day for an hour and a half, and I can really hand hold you. But if that's sort of the thing, guys, that you really need, then that second link in the description there, guys, go fill out the application form. Now, here's what's going to happen. On the application form, when you fill it out and we speak on the call the first time, I won't be offering you anything. Right? I don't offer people the first time I speak to you. I don't offer it the first time I speak to you. It's just about us having a good conversation and see if we do jive and to see if it's a good fit for both of us. And then if I think you're actually a good fit for what I'm looking for, then maybe we do a second phone call later on, right? So this first phone call, I don't just offer it. I like to talk to people, go away, think about it, take my time, because I don't need people, but I do want to help you out. So if you do want to have a chat with me, have a good chat with me, go fill out the application form, that second link in the description there, guys, and I'll speak to you real soon.